to today's exclusive webinar on NSE's electricity futures. We've all heard, right, that electricity is the future, but electricity has now also landed in futures and options in the stock markets. So let's just dive right in. We're excited to have with us today Mr. Anil Kale, sir, who's a senior manager for strategy and product development at Power Exchange India Limited. He's a mechanical engineer from Osmania University and holds an MBA in power management from NPTI Faridabad. With over 21 years of experience across key areas such as regulatory policy, competitive bidding, project control, and power market strategy, he brings a unique perspective to the table. Right? He currently leads strategy and formulation at PXIL and has previously worked with industry leaders like ICRA, CRISIL, Gujarat Mineral Development Corporation, and DLF Power. Right, today, he will help us break down the nuances of electricity futures, what they mean, why they matter, and how they can be leveraged effectively. So,
Yeah,
over to you,
thanks,
sir.
everyone. Thanks for the long introduction. Thanks for the long introduction. And
Okay.
just to brief everyone over here during in the webinar, I've been part of Power Exchange Limited from May 2012 onwards. So it's been a 10-year long journey with Power Exchange and more than 10 years. And Power Exchange is promoted by NSE way back in 2008. We commenced the day-ahead market operations. And subsequent to that, over a period of time, over the past 16 years, from the day-ahead market, we have also introduced products for physical trading in electricity for different tenures. And today, the tenure can be as low as 15 minutes during a day. So the day or 24 hours is divided into 96 equal time blocks of 15 minutes each. And also for forward contracts where delivery up to 90 days can be covered. So when we say 90 days, it's nearly 3 months ahead. So we have a 3 month ahead contract, and wherein like today, if it is 10th of July, you can actually trade power for the months of August, September, and October for physical trading on the Power Exchange platform. And this platform has seen a good amount of traction when the products were introduced in 2022. And now, with the introduction of the monthly futures by NSE on its commodity platform, we will be able to hedge all the participants who are currently in the physical trading of electricity. They'll be able to hedge the price risk associated with every transaction that takes place. So that's the advantage that we get from the futures market, because in the futures market, you are able to hedge the price. And that's how for a generator, there could be possibility of higher realization of price. And for a buyer, for a buying entity, now this buying entity could be either the state-owned discoms, or you have large commercial and industrial consumers, and you could have large retail clients like malls, hotels, resorts, and also maybe large residential complexes and large residential buildings. Individuals also can be taken care of under the futures market. And however, there is no physical clearing of power. So when we say physical clearing, there is no actual flow of power from the selling entity to the buying entity. It's the financial settlement which happens the way the futures market operates in any commodity segment or the derivatives on the equity exchanges. So that's what is the brief that I can provide regarding the electricity and its corollary or relationship with the monthly futures contract. And the proposed monthly future contract to be introduced by NSE would be the weighted volume average price of all the three exchanges. When we say three exchanges, in addition to Power Exchange, there are two other exchanges. One is IEX and another one is Hindustan Power Exchange. So all three exchanges operate the day-ahead market. So the monthly futures contract will be the weighted volume average price of all three exchanges, and that's how the settlement will happen. So it will be a common price settlement that will take place on the futures. So this is a brief as an intro, and maybe I can address the queries that come up. Yeah, thanks.
Thank you so much. Thank you so much. So let's get started, right? Let's start with the basics. Someone who's new to the stock market, right? How would you explain what electricity futures are?
So, as I have said, that we as a power exchange, there is a day-ahead market and there's this. Now, when it comes to someone who is new and who intends to participate in a futures market, now for every consumer, maybe even as an individual also, I as an individual or all the participants who are there in this webinar or you as an individual, we are at the end of the day electricity consumers. And for us, the electricity consumption is in terms of an expense that we have over a month. Okay, every individual or every company or every industry that operates, or even a agriculture farmer who uses electricity, everyone receives supply from respective state discoms. I am in Maharashtra, so I receive power from MSADCL, maybe someone from Tata Power and all these things from Mumbai. When it comes to other states, every state has a distribution company. Okay. So the distribution company's responsibility is to provide power or supply power to each individual consumer. And for us, whatever consumption, whatever electricity gadgets that we run in our premises or in our houses leads to a monthly bill that comes in, which is generally in the form of a unit. So I receive bill of about somewhere about 7,000 rupees with 300 for 300 units of consumption. Okay. So that's an average of nearly 18 or 19, depending on what is your consumption, what hours you consume, and all that. Whereas during the winter months or during these monsoon months, okay, it reduces to as low as 150 or 140 units. So that's nearly 50% less. So at 50% less consumption, it's a lesser number of unit and lesser expense. But that doesn't mean that we will have similar season, similar consumption all through the months. Okay. So since consumption varies based on seasonal demand and also other demands that is there, so every month there is fluctuation and usage of electricity. And depending on the requirement to use electricity, electricity is an expense. Now, this expense, when we say unit that comes in our bill, is termed as in the terms of kilowatt hour. Now, what NSE is introducing as monthly futures is at least 10 power 6 times the number of units that will be there, which we term it as in megawatt hour, because here it is the grid at the country level that it is being traded, units are being traded. So at megawatt hour level, there is a possibility to look into how we can optimally use power, how we can reduce our electricity consumption, and also lead to reduction in power purchase cost. Now, even though as individuals, unless we are large load, which I have said that maybe it could be malls or it could be large retail spaces where as individual customers we can come. Our collectively, if there is a discom that is supplying power to me, and if it is in a position to take a hedge its contract for future months, then it can take opportunity of lesser price that is available in the market based on monthly changes or seasonal changes, and pass on the benefits of reduced cost in a futures market to all its consumers. So when it passes on this benefit to consumers, it leads to reduction in cost to individual consumers like us. It could be retail industry. So that's the benefit it what we can say. And but when it comes to your specific query related, how does someone new get introduced to monthly futures? Yes, it requires some minimum consumption to be done. But however, how it affects is since collectively it is the supplier who is taking care of reducing the cost, it helps us if the discom of the state also purchases a futures contract to reduce the power purchase cost. So individually it reduces that. Maybe not in a way that you have equity trading where someone can purchase maybe in shares of individual companies trading at anywhere between 100 or 100, 2000, 3000, 5000, depending on whatever is the company or whatever valuation it has. Okay. But in case of electricity, the minimum traded unit is much higher, and because of which individual retail consumers cannot, but however the suppliers they can benefit from that. So that's the limited, even though it's a elaborated solution, but it's a limited answer that I can provide at this stage.
Okay,
Okay.
thank you so much. Also, thank you for shedding light on why it's relevant in today's energy market, and also how electricity is treated as a financial instrument, right? Very
Yes.
interesting. So, also, why launch a product like this now? Why now? What market needs or gaps does it exactly solve?
So as I have said, it's a hedging tool. Okay. And why it needs to, why is it being launched? The question, I think the right query would have been, why is it being launched now and not earlier? Okay. Earlier, when the exchanges started in 2008, so NSE promoted Power Exchange India Limited in 2008, and in 2008, it was a day-ahead market which was introduced. But however, in the initial stages, since it's a shallow market, and all futures market or all derivatives are linked to or pegged to a reference price or a reference contract or a reference market. Okay. So in case of electricity also, you require adequate depth in terms of physical trading of electricity. So since physical trading of electricity is established as per the day-ahead market, which is running for past 16 years, there is good amount of depth that is available. And in addition to that, in the electricity market that is available, okay, the country's generation is about somewhere about 1900 billion units, 1900 billion units of energy. Now, this billion units means it is nearly 10 to the power 9 units of electricity. We consume, maybe when I say my consumption is 200 units for the month, it means I am using 200 units only. Okay. Whereas country's consumption is somewhere about 1900 into 10 power 9 units of electricity, out of which the electricity that is traded in the short term market, when I say short term, in less than 1 year tenure contract, it is about 238 billion units. So since there is a market that is available to be tapped, okay, of 238 billion units, and that has been established, of which nearly 50% is on the exchanges, which is nearly 143 billion units. So there is a ready volume or a ready market that is available for hedging. So when I say hedging, it is both the selling entities. You have different generators, coal-based generators, wind-based generators, wind solar entities, okay, who are selling power on the power exchanges. And then on the buy side, you have the discoms and also large commercial and industrial consumers. So this transaction that is happening on exchanges is nearly 230 billion units. There are other OTC markets also which are available, which is another 90. So we have a ready market of nearly 230 to 240 billion units, which is available for hedging. And this instrument of hedging, okay, is helpful to hedge the price risk by all these entities. And why it is coming now is, yes, earlier there was a regulatory logjam between the two regulators, CRC and SEBI, like under whose regulatory domain it needs to come in. In October 2021, based on the Supreme Court judgment, it was directed that the physical trading of electricity would be regulated by CRC and derivatives in electricity would be regulated by SEBI. So over the past 2 years, both the regulators have been doing consultations both with the industry and also with other stakeholders. And now they have both of them have jointly approved introduction of the monthly futures, and that's how we are now starting with the monthly. World over also, there are different markets of different tenures, and the matured market like the European market, it has tenures of monthly, even weekly also, lesser than monthly, quarterly, monthly up to 12 months ahead, quarterly up to 8 quarters ahead. So nearly 2 years can get contracted, and yearly up to 5 years. So this is just the beginning in the Indian derivative space, electricity derivative space, where NSE will be introducing monthly contracts for 3 months ahead trading, and subsequently as traction gets built in, the 3 months would be increased to quarterly. So these are early days. So we first commence with transaction in monthly futures from 14th of July, which is 3 days from now. And then as traction increases, we'll have quarterly contracts also. So since there is a good base in short-term market, we feel it's the right time to now introduce derivatives and electricity.
Right.
Yeah.
Okay. Can you also walk us through the key features of the product, like trading units, tick sizes, and
Sure,
margins? And
sure.
yeah, if you could simplify that, it would be really
Yeah. See, the monthly contract is for a duration of 30, or it's for a calendar month. So, in the day-ahead market that is there, in the physical electricity day-ahead market, prices are discovered on daily basis. Now, based on this discovery of prices on daily basis, the futures would operate. And when it comes to the characteristics of participation and trading, the minimum trading unit is 50 megawatt hour. And this 50 megawatt hour is equivalent, or the megawatt hour as an energy unit is equivalent to whatever is traded on the physical market, which is also in megawatt hour. The tick size is about rupees 1 per megawatt hour, uh, which is equivalent to what is existing in the physical market also. The maximum order size, single order size, is 50 times the minimum tradable quantity of 50 megawatt hour. So that is 2500 megawatt hour. So the minimum trading unit is 50 megawatt hour. The maximum trading unit is 2500 megawatt hour in a single order. And depending on participants' requirement, multiple orders can be placed. Tick size would be rupees 1 per megawatt hour. Yeah.
okay.
And
Okay.
the
And
tenure is for 3 months ahead. So when we introduce on Monday, it will be for 3 months ahead contract. So you can trade for August, September, and October, all the 3 months.
okay.
And the price, the settlement price or the monthly settlement price, which we call the DDR price, that will be the weighted volume average price of all the three exchanges in the day ahead market combined together.
Okay. Okay.
Yes.
So, what kind of liquidity can participants expect, right, in these contracts, especially early on?
We expect the potential, as I have said, the short-term market currently is about 238 billion units. So 238 billion units would be somewhere about 238 into 10 to the power 9 units of energy. Okay. So that's the potential we expect, that which can migrate from the short-term market in a very short period of time into the derivatives in a very short period, because that's a market which is which is what is thriving and existing in the power exchanges. So we expect that to migrate into the futures in a very short period of time.
Yeah. Okay. So, electricity prices could be a little volatile, right? How do you manage or factor in risks like demand shocks or regulatory changes?
Per se, when it comes to demand shortages, yes, it is a fact that the volatility is due to change in the consumption pattern that exists month on month basis. It also reflects the seasonal changes that happen, and seasonal changes primarily, as you are aware of, or as everyone of us is aware of, we have the summer months followed by monsoon, followed by a very short peak period wherein during September and October, the because of reduction in the supply from renewable sources, primarily the wind, reduction in wind and increase in agriculture load, leading to peak demand coming in sometime in September and October. Then you have the winter season coming in, and then you have the spring, and then another cycle of seasonal change for a year. So since there is seasonal change that happens, yes, there is this volatility which will remain because of the participants' requirements. However, what we feel is futures will be able to stabilize the prices, because eventually the settlement price in the physical market and the futures price would converge, so that the volatility would get reduced.
Okay.
And
Okay.
when we look into other aspects related to the day-ahead market, in addition to day-ahead market, there is also a real-time market where delivery is available up to 30 minutes ahead. And this 30-minute ahead means there for the 24 hours of the day, there are 48 different auctions which happen. And since this is the last resort or last market that is available, the possibility of placing a desperate bid by buy side entities cannot be ruled out. So during the day, as time passes, like I would like to spare a couple of minutes to on a point saying that how the fluctuations happen during the day. As everyone of you is aware, that solar hours, prime solar hours are between 10 a.m. in the morning to 4 p.m. in the evening. Okay. So every state has good amount of solar installation which has happened, and solar plants are being promoted and invested by, or they are the favorites of most of the investment communities. So there is huge solar capacity which is getting added up year on year, month on month basis. Now between the solar hours of 10 to 6, there is good amount of stability in prices and also softening of prices. However, prior to entering the solar hours and post exit from solar hours and before we enter into the peak, okay, the prices fluctuate because from solar we are migrating to other technologies where the variable charge increases and the play. So during the day, the real-time market also reflects the volatility. But however, for the day, yes, since it's a related phenomenon that recurs on day in and day out basis, there would always be stability, and we expect that futures will help to reduce volatility in the prices.
Okay. Okay. So could
Yeah.
you also tell me who is this product best suited for? Is it for hedgers, institutions, or retail traders too?
We say it's in the initial stages, it's best suited for the hedgers because then it helps them to contract for future periods. Okay. And as the tenure increases from monthly to quarterly, they will also be in a position to optimize their purchases, optimize their revenue relation and sales. And considering this fact of optimization, there is always a possibility that hedgers may take a position which is much more than the covered position, and hence over a period of time we expect other participants also in the market to come in, which could be speculators and arbitrators, which could be. But initially, yes, this product is required for hedging, and we expect good amount of the buy and sell side participants only. Yeah, I have Dr. Ahuja from NSE to answer this. So,
Hi, Harish sir. Hello.
I think he's unable to speak. So maybe,
1 second, I'll just promote him to panelist.
yeah.
Yeah.
No, he's joined. He's joined.
So thank you very much. In fact, I'm in a function here for Guru Purnima, but I think the discussions are going quite interesting, so I couldn't stop myself. It's a very interesting question. I think Anil answered you very well. He's right that as a, I would say in the beginning, it's a very delicate product, you know. This product is suited for everyone, retail trader, hedger, or you can say generator, discom, industries. But in the beginning, I think if we do not handle this product with a care, there could be eyebrows around us, which will be, you know, unnecessarily making it a speculative product, which is not, you know, it's a pure hedging product. So what Anil is saying that in the beginning, if we can promote it among the hedgers, which maybe industries, hotel, malls, you know, even they are hedgers, you know. For us, those are the categories which are buying from the spot or not from the spot, having some additional requirement, going to discom for buying some additional temporary requirement. They're all hedgers, you know. When you ask the retail means the typical guys who are doing FNO. I would say they should keep it a very close watch on this because ultimately electricity understood by everyone. You know, you and me also understand this in terms of our billing, in terms of our consumption pattern. So this is an electricity, this is a commodity we consume. You know, so unlike crude, unlike gold, unlike natural gas, which is kind of B2B product, electricity is a very B2C product also. So in the beginning, keeping the sensitivity and public good nature of this community, we would suggest that encourage it among the hedgers. And hedgers means hotel, malls, SMEs, industries, open access customer, attraction eye, companies like you know, who can take the position, take some bet on prices. Then maybe seeing the initial traction, retailers like you and me, people who have understanding on the prices, who have some say in terms of what kind of prices they like to see around, they can come, and it will not take too long. We are not saying wait for ages, wait for 3 years or 4 years, maybe 3 months, maybe 2 months, maybe by October market will be so mature that even people like you and me who have some say on the prices will also take a participation. Would I answer your question?
Yeah.
Yeah, thank you.
You did. Thank you so much. To give the audience some context, Dr. Harish Ahuja is the head of product and strategy development in main board listings and the social stock exchange at NSE.
Thank you very
Yeah,
much. Continue. I'll be around. If I need to compliment Anil, I'll compliment him. Please
sure,
continue.
sure.
Question. Yeah, I'm here.
Okay, sure. Anil sir, do you have anything else to add to that particular question?
So I was through with the volatility related. Yeah,
Okay.
thanks.
Okay. So, what are some of the price movement restrictions or risk limits that are in place, and how do they help, protect traders?
The price limits are as per whatever is prescribed by SEBI, and it's up to 9%. So 6%, 3%. So limits are up to 9%.
Okay.
So whatever are SEBI's regulation for commodities, that would made applicable even in the electricity futures.
Okay. Okay. So, what kinds of strategies can someone explore with these contracts, like calendar spreads or arbitrage? What?
Yes, calendar spreads could be a phenomenon, because as I have said that the 12-year calendar has is a seasonal calendar. Okay. And during a specific month, like if you take the specifically the month of September, okay, early September, you still have the effect of monsoon in some regions, okay. But by the time you move into third week or fourth week of September, the September heat picks up. So there is increase in demand, leading to increase in prices in the day ahead market. This is how it is. Whereas in the early September or maybe late August, there is softening of prices. And then once again in the month of October, this continues. This change continues in the month of October for initially maybe 1 week or 2 weeks. And then from October, once the winter uh, season picks up, okay, in some parts of the country, there is softening of prices. Similar phenomenon is also observed in the month of February and March. Okay, if you have delayed winters stretching up to March, mid-March, okay, there is softening of prices. But however, if winter starts receding sometime from second or third week of February, okay, that may lead to spike in prices, and sometimes in March, okay, you may actually have a good amount of heat and summer heat cropping up, and then sometime, unless and this does not recede till we have the rain-fed water coming in from the ice melt happening from the Himalayan rivers, leading to good amount of hydro and stabilizing of prices. So considering this phenomenon of seasonal change also playing a major role in electricity demand and electricity pricing, price discovery, we feel that in the monthly contracts also, this spread could be used, or this spread could become a phenomenon for entities to actually hedge their prices. And it could be both on the value, or both on the physical market participants as hedgers, and also for the other retail entities.
Okay. Okay. What should first time participants keep in mind before trading electricity futures?
And as Dr. Ahuja has said a couple of minutes back, I think these are early days. So let the physical trading entities hedge their risk, and it's good for others to observe how changes are happening. What is it, how the whole cycle of price reduction takes place, or how it affects usage of electricity and its related reduction in cost of consumption, both for consumers, retailers. And then over a period of time, by understanding the seasonal elements that come in, and in addition to seasonal elements, all over the country, the electricity demand also affects from based on the agriculture season or the cropping pattern that is existing from state to state. So even that also plays a major role in how prices are discovered in the physical day ahead market. So considering these two factors, I think it is too early for any retail entity to come in. It's better to observe, do good amount of research and study regarding how the physical market behaves, and then take a call regarding participation for a period of time to actually help all our retail participants understand the electricity market. We are also sharing good amount of information on our portals related to the day-to-day change in demand, day-to-day energy consumption pattern, day-to-day power supply position that is coming in from different sources, and also how the weather pattern is playing a role in discovery of price from day-to-day basis. So all these factors can be analyzed by all our participants, including retail ones, so that they will be in a position to take uh, informed hedges or informed positions in the futures market.
Okay. Okay, what's next in this particular space, right? Are there any plans for new products or expansions or any of that sorts?
Yeah, when it comes to electricity, I think as I have said earlier, once we get traction in the monthly, our next objective would be to have quarterly contracts. Now the monthly contracts, our window will, even though trading is open only for next 3 months, but the calendar would be out for next 12 months. And subsequent to this, once we get traction in the monthly, in the early phases, we'll seek approval for quarterly contracts where up to 2 years window will be available. So this will be settled on quarterly basis. So up to 7 quarters ahead it will be available, followed by yearly as we progress. And also we are keenly observing developments in the CFD space where there is good amount of interest which has come in from many developers and investors who are already connected with NSE because of the different products that are available on the equity platform. So yes, we will be coming out with new products, and in addition to the calendar products like monthly, quarterly, CFDs could be the next product which could be of interest to all the participants, including investors at large.
Just one addition here, everyone.
Yeah.
Anil has explained very well. In fact, NSE is quite clear in terms of this short-term, mid-term, long-term strategy. In terms of short-term, definitely monthly plus 3 months ahead. In terms of mid-term farmers, in next 3 months, I think we'll be filing the applications of SEBI for quarterly contract, 1 quarter plus 7 quarters. And once we see the liquidity in both monthly and quarterly, because we would not need to split the liquidity, because if we launch too many quarters or too many contracts, people will try to shift different contracts and liquidity will split. So we'll keep a very close watch on monthly and quarterly, because quarterly definitely is a thing for us. Annual contract, you can expect 9 to 12 months, not before that. And CFD, we can launch anytime. I mean, we are in close touch with the Government of India officials, Ministry of Finance, because I think the CFD per se is not a product which could be actively traded per se, but it could be help to transfer the lot of long-term PPA volume to the short-term market first, and secondly, to attract a lot of investment in renewable, especially offshore wind and battery storage plants. So I think CFD is a pure product in terms of diverting the volume from long-term to short-term market, which will ultimately help both monthly and quarterly, and also attract long-term capital expenditure in offshore wind and battery storage. Continue, please.
Yeah. Anil sir, would you like to add anything else?
That's fine. Yeah. Dr. Ahuja has identified new areas.
Okay.
Yeah.
Okay, so if we could go through the comment sections questions.
Okay.
Yeah. So what are Mr. Kale's expectations of volumes that he expects in 6 months or 12 months time for this instrument?
So we expect the full short-term market volumes of about 200 BUs to come onto the exchange platform for hedging, on the futures platform for hedging. That's our That's our immediate focus area, that how do we convert this 238 PUs into the futures market.
Okay. Someone has also asked, is it only futures or options also available?
Currently, as we stand, it's only futures that we are introducing.
Okay.
No options we cannot enter anyways because you ultimately the option gets set at the future price. Till the time future prices are not formed up, and SEBI has a kind of regulation on this that unless 1 lakh contracts are traded, something like that, the price is not taken as a benchmark. So I think to achieve those kind of volumes, including MCX and us, will take some time. So options anyway not in our priority list. But yes, sooner or later, options will give better hedging instrument, especially for uh, people having the physical asset then because they can take the long call and short call also. But at this stage, option is definitely not in the priority.
Okay. Okay. Someone else has also asked, what is CFD?
So CFDs are nothing but contract for difference of prices, As per Security Contract Regulation Act 1956, contract for difference are a derivative document, a derivative contract, which can be traded by SEBI regulatory exchange, both BSE, NSE, NCDX, MCX, Now, what is this? Let me give an example, a very crude example. The example is like that me and let's say your companies where you got a solar plant and I'm a buyer, NSE buys power from Fire at a particular price. Now, we give you assurance that whatever volume is coming out of solar, let's say it's 100 megawatt of plant, and in 100 megawatt, if you generate a 20% PL of, let's say, 1.6 into 20, 32 MUs in a year, So I give you a guarantee to take those volume, but I would not pay you the price basis what we sign in the PPA. I can tell you that, okay, there are two options I have. Either I go for exchange for physical where entire price, is discovered at exchange would be paid to you, whatever price. Like I say that I go to NSE and NSE monthly future, whatever price it will discover, that's the price I'll pay in the month. Okay. The second thing could be I choose a minimum price, which you call a strike price, that I will give you 1 rupee. Over and above, we'll see the prices. If the prices are going up, you pay me. Price going down, I'll pay you. Something like that. So there's a two benchmark for prices. One is which we together agree in first case scenario, we agreed for zero price in the contract. Everything is market driven. The second case, I said I'll give you 1 rupee strike price. The balance difference would come from the market determined prices. So contract for difference between in the physical market and the exchange market. Would I answer this question?
Yeah.
Yeah, to Dr. Amja's point, there are already CRC has come out with the guidelines for introducing the virtual power purchase agreement, which is akin to the concept of CFD. And since draft guidelines are out, we expect the final guidelines to be issued in next couple of months. The draft guidelines were issued sometime in early May, inviting stakeholders to submit their views and opinion. So we expect this to get finalized in next couple of months. So once the final guidelines are out, we should be in a position to firm up the contract related to CFD.
Okay. Okay. So those are all the questions I think the chat had, and so did I. Do you have anything else you want to add?
Anilji, have you shared my typical stories, which normally I speak with the people about?
No, sir. No, sir. No, sir.
So,
No, no.
for your participant, in fact, I'm giving you 3 anecdotes. Maybe those are relevant for you or not, I'm not sure. But, those stories are very interesting. I just like to ask the participant here, how many of you have got a call from your telecom operator in last weeks or couple of months wherein he has asked you, one fine morning, he's asked you to pay him 6,000 rupees for data, 2,000 rupees for calls, and 500 rupees for SMS. Roughly 8,500 rupees. Even without asking asking you to pay. And you are quite shocked. You are asking him, but I never asked for this. I never chosen this plan. Why you're asking me to pay 8,500? And the other side suggests you, sir, I cannot do, ma'am, I cannot do anything. It is a regulator order. Have you got any such call in the past? Can you answer this question to me? Any one of you? Have you got such kind of call from your telecom operator, Jio, Airtel, Vodafone? Any one of you received such call where they are without your choice of plan charging you 8,500? Any one of you?
No, sir. No. phone user, but I've never received such calls. You only get a direction saying that this is the new amount that you need to pay.
Exactly. So no such calls come from the telecom operator or people who manage the telecom towers or your network, right? But similar things are happening in the electricity. Every day, utilities are charging you, discoms are charging you without asking you, without your participation in the market, certain charges which are not as per your wish. There's no demand participation. They are charging you. So this is yes in case of electricity. My second anecdote is in the morning of Monday, you are already quite late in terms of going to office. You are ready in terms of your tiffin ka box, your laptop bag. You're getting out, and suddenly your mom or your wife or your girlfriend, whoever suggests you that please take the milk before you leave for office because I'm getting late. I'm going to bathroom. You collect it, and you go out. The milk wala is standing at the door. He gives the milk 1 liter at 100 rupees. You pay him 100 rupees, keep the milk, and rush to your office. After a busy day of work, you come back to office in the 5:30 in the evening or 7:30 in the evening, whatever time, and suddenly you find that there is no milk in the home. You again ask the same milk wala and say, okay, give me 1 liter milk. He comes, he hand over the milk to you. This time when you pay him 100 rupees, say, no, sir, price has changed. Price are 1 rupees, 150 rupees per liter. Have you ever witnessed any such case in your life in terms of milk or any other commodity where in the morning you paid 100 rupees for the same thing and by evening the price has gone by 50%? Have you seen this phenomena in your life? Anyone? Anyone?
Yes, it happens in case
Yeah.
of because of shortages.
Yeah. So in case of some agri commodity, tomatoes or onions, it has happened, but most of the time it has never happened. But in electricity, it is a very regular feature. They call it time of day meter. Again, you are paying without your participation. Some prices spike in the spot market on the RTM market, and you are being asked to pay higher prices for the same day for the same electricity, which runs the same heater or same coil or same geyser, but you are asked to pay. Why it is happening? Because there's so many inefficiencies in the present market design, which will be taken care of. Certain good things. The third question is, how many of you have got this call from your discom where they're offering you to charge you less if you're paying per unit 10 rupees for this month, let's say July. They are asking you, ma'am, in the month of August, September, October, I'll charge you instead of 10 rupees, 3.5 rupees or 5 rupees. Would you be happy to take these charges? Have you ever got such call? I don't think you must have got such call. Correct? But these calls are happening every day across the globe in developed market where power markets are completely restructured in terms of allowing the retail supply. Anilji, did we tell them about retail supply separation and all? Have we told them?
No, sir. There was a request saying that we get into Q&A and not into the presentation.
Yeah,
So
so I
we
think that
started
is
with
very,
Q&A
very
discussions.
important. I can understand FRAX is basically helping the young traders to participate, but unless they understand the structural flaw in the entire power market reforms, they'll not appreciate this product which has been launched by us, NSC. So the third call, it's very much possible that if you participate, I mean, many I participate, the hedgers, or gradually the traders, and they give some kind of price signaling. If those price signals are heard properly by the regulator or the utilities, your prices are going to go down and you will surely get a call from your utilities. If not today, tomorrow, after 6 months or 1 year or maybe 2 years, that next 3 months, rain is, rains are very heavy. So we have got high, storage in terms of our pump storage plant. We have sun is shining, wind is flowing. So we can charge you less prices. So I think this is a very revolutionary product. At this stage, we like to see it long term. Again, I say this is a golden goose. This product is a $475 billion opportunity for us. Electricity is not a small thing; it's a very big thing, and electricity commodity as a future is going to be a very big phenomena. If you treat it, we say handle with care. Please take care of this golden goose. It will surely lay golden eggs. Thank you very much from my side.
Thank you, sir. Thank you so much. Anil, sir, do you have anything else to add? You said you had a PPT, right?
Yeah, we can run through two specific slides where we can speak about the industry, and that's how we can appreciate.
Yes.
Just give me a couple of seconds.
Sure.
Then, right. Yeah, I hope the presentation is visible.
Yeah, I can see your screen. Yeah.
Yeah. Uh, uh, as Dr. Ahuja was appreciating the electricity market industry, the core market or the core electricity structure as it operates today is there are three segments in the electricity component. One is you have generation, second one is transmission, and third is distribution. Distribution with retail supply. So when we say generation, primarily it is your solar-based plant, wind-based plant, coal-based plants, hydro, nuclear, and maybe biomass and biogeneration. Now, this generation, since in 2003, generation was delicensed. So, any entity or any person or any individual can set up a generation plant and he does not have to take any licenses per se. So, that's how it exists. And world over also, that is what is exists. So, generation is a highly competitive market, highly competitive business, and no licenses are required. On the other hand, when it comes to the other two aspects, which is your transmission and distribution, yes, there are matters related to capital investment and also how the complete business operates. So when it comes to transmission and distribution, primarily it is the laying of transmission lines and wire lines. So when we say laying of transmission lines and wire lines, like in case of transmission, you have high tension wire lines running from one part of the country to another part, one corner of the state to another corner state. So it's a highly regulated and a natural monopoly business. On the other hand, the third aspect, which is the distribution segment, this primarily comprises of both the individual asset, which is basically laying wire from the electric pole, which is nearby in the surrounding areas or on the roadside to individual consumer's house and up to the meter, and then from the roadside pole to the nearest substation and from substation to the much larger substation. So it's the wire, and then also you have the retail supply. Now, when it comes to retail supply, it is basically supplying power to individual consumers like us. So we are retail consumers or residential consumers of our discom. Similarly, the other consumers are your commercial industrial consumers, the small scale industries consumers, the large mall consumers, and then also large industrial units consumers. So collectively, this business of supplying power to individual consumers is identified as a retail business. And world over, the wire business and retail business are separate, segregated businesses, and there is good amount of competition in retail businesses. So a couple of minutes back, when Dr. Ahuja said that maybe 3 months or 6 months from the line, we will get calls from the discom saying that for next 3 months, because of availability of power, they are in a position to provide power to us at a much cheaper price by hedging their power purchase cost. So this phenomenon exists world over in many developed markets like the US market, the European market, and in Asia you have Singapore, Australia, Japan, South Korea, wherein you have multiple distribution licensees who are supplying power. They are competing among themselves. So they compete to retain consumers, and they retain consumers based on the cheapest power that they can supply. And when they are supplying cheapest power, it is contracting physically from cheapest sources and also hedging the price in by purchasing the derivatives in for different tenures or time of tenures, that is all. So that's the retail business. So by having this in the futures market, all Indian consumers, maybe the retail consumers, maybe not individual consumers like us, but the discoms who supply to us and also the commercial consumers, they will be in a position to hedge the prices at which the power is supplied to us. And that will lead to reduction in power purchase cost. So this combination of physical power and hedging will lead to increase in retail competition. So this is what we are moving at. Currently, it is only loads with 1 megawatt and above who can avail the open access and competition. However, by having this the monthly futures contract, it is the larger industry and the larger set of consumers which will also come in. So this was the emphasis of electricity structure that is existing, and this is what we are looking at when we introduce the futures market. So in brief or in nutshell, the electricity industry structure will have a transformative change going forward when the futures also get introduced. And the earliest that you will have is the monthly contracts that will commence from 14th of July for the months of August, September, and October. So that was the brief that we wanted to share as part of the presentation.
Right. Okay. Thank you so much. The entire session was very, very insightful. Thank you so much, Miss Anil sir and Harish sir, for sharing your time and deep expertise with us. Right. You've helped us understand the real world potential of electricity futures and how this product is really set to add value to India's evolving energy and the entire trading landscape. Right. To everybody who joined us, thank you so much for being a part of today's session. We hope you found it insightful, and we also look forward to hosting you again in our upcoming webinars. Until next time, trade smart and stay curious.
Thanks to everyone.
Thank you.